Hello everyone, it's September 4th. I thought I'd give everyone both a video and an update on the markets. So as you see, gold and silver have been kicking ass. 1551, silver 1958. Um, I'm using teletrader.com here. I use their mobile app. That's what it looks like over here. Um, I highly recommend it. It's been pretty reliable and you can get a broad vision of what's going on in pretty much every market, whether it's equities or commodities or bonds or whatever you're interested in. This is Teletrader. So let's look at the 1 month, 3 month, 6 month, and 1 year performance of gold relative to the Dow and other equities around the world. Um, Now, when it comes to 1 year performance, gold and silver are now outperforming stocks by a factor of 20. Of course, that's a little unfair. You go down to 3 years, and gold is still behind equities, but if that 3 year performance is rapidly improving, that could change any time. But as you can see, from a year ago, you were better off in precious metals than stocks already. So that trend might be continuing. I expect it to. That's where my money is. I own very few U.S. stocks. I'm very heavy into precious metals. Um, I think a lot of the economic policies being implemented right now offer zero hope for anything getting better in terms of inflation or um, the fiscal responsibility of government. There is no signs of maturity in that way. So 1550 gold, that's a major threshold. We'll see if it continues to perform. 1 year, 30%. And people don't even know what it is. What percentage of Americans own gold? 1%? I mean, most of it's going to be jewelry, and they don't even know it's real money. Moving on. So today's video, I wanted it to be primarily on this. There's this new propaganda coming out regarding this recession talk. If you've noticed, starting late July and then heavily throughout August, a lot of media sources started bringing out the word recession. And the fundamentals have not changed. You know, nothing major has changed in like all the trends are continuing. There is some talks of some inverted yield curves, but whether the curve is inverted or not, I mean, things look bad for the economy. But what I wanted to bring up was the narrative. It's crucial because the media controls how people think, and the media controls what people pay attention to. And if people think there's going to be a recession because that's all they hear, recession, 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 it's going to be a self-fulfilling prophecy. Because our economy, the word con is in economy, and con comes from confidence. You know, you con someone, you deceive their confidence. Um, all currencies and the equity markets now, at the current evaluations, cryptocurrencies as well, they all rely on confidence. Gold, somewhat too. It represents the lack of confidence or the confidence in the system, in governments. People vote against government by buying precious metals. And I wanted to bring up this recession talk. See, Zero Hedge talks about it. CNN, another media source. Possible recession, August 21. Fox, recession. Fox Business, rather. Um, Recession. This word was not around a year ago. This is a new shift in the paradigm that the media is being told to push. And this is important for us to be aware of because from a mile away you can see that they are going to blame Trump. Now, the policy, this coming depression, this coming recession, Donald Trump never didn't exacerbated the issues, but we were screwed no matter what he did. I mean, he could have done some revolutionary things and changed things, but he would have been JFK'd. He's gonna just kick down. He's just gonna kick the can down the road as long as he can, because he does not want this to crash on his watch. He knows everyone, like whether you support the man or not, you know that if there is a 50% correction in equities in the U.S. stock market, he's not going to get reelected. That's just flat out. And you can see they, the media, they they like to appear bipartisan because it's part of the divide and conquer tactic, but they really don't care who's president because government just expands, spending goes up, and government debt goes up, stock markets usually go up, no matter who's the president. So it's kind of this big WWE match that they're getting everyone to fall for. They root for their guy, the red team, the blue team, but one factor is that they love to paint the red team as the free market capitalist big business assholes who don't care about the environment. They don't care about the common man. They just want profits. They don't care about the environment, and they are very war friendly. That is the mentality that's being pushed. That is how people generally view the red team or the Republican Party, and that view will be leveraged in this next coming recession. They love to paint Nixon as the bad guy, Bush Jr. as the bad guy, and now they're pushing Trump as the bad guy. They don't care about the environment. They don't care about socialism. They don't. Well, even though they're all socialists, but the red team does a much better job of disguising it. You know. So, I mean, military spending in itself is socialism. Social Security, which every Republican advocates for, is socialism. So, I wanted to bring up how from different various media sources you can see this trend is improving, and to illustrate it, the trend for the word recession, and to put it in the mind spaces of talking about recession, to instill fear into the populace. Also, they're preparing blame. They're preparing blame on Trump. Here's Google Trends search. As you can see, in June, the word recession was not being thrown around. Here you have the last crisis. Duh. Crisis, people are going to type the word recession. Makes total sense. But why this? Why? Why? Always ask why. I mean, the puppet masters of the media were given marching orders. Obvious. So there's an agenda here. Here's a site. Bloomberg has it. You can go to this URL. And every gray bar you see here it shows the level of the stock market, and it shows a corresponding Trump tweet to that date. Now, I wanted to point this out because go to a high point here. Watch Trump tout his market. That's a complete bubble and addicted to low interest rates. And he owns this market, regardless of how you feel about the man. If theoretically, like I said, there is a huge crash in the markets, he will be blamed. He owns this market. Before he was elected, he espoused it being a bubble. He said the economy was looking bad and all that looked good was the stock market. He got into the White House, instantly flip-flopped. Now this is, of course, when I lost all faith in the Trump administration. It took a mere month or two. But a lot of people still have faith, and it's going to be painful for them because reality will hit them in the face. So this is very illuminating too, and I thought that I would bring this up. This is from the Fed website itself, Federal Reserve Bank of St. Louis. And you can see the Federal Reserve's effective federal funds rate going back to 1967. I had to stop it somewhere. And I think this illustrates how, see, if we had a free market society, there would be no powerful banking entity setting the price of anything, much less the most important price in all of an economy, which is interest rate, which is literally the price of money, the price of capital, the cost of using capital. And it is one of the central tenets of communism to erect a central bank which can dictate interest rates completely regardless of what the free market may or may not want. Now, in a normal free market society, you would have competing banks competing to attract depositors, as well as competing to give profitable and attractive loans to prospective businesses looking to grow. In our society, we don't have that. We have price dictated by a centrally located authority, which is communism. Now, with price setting, you have manipulation of price action, because people will adjust their behavior based on the interventions the government does to block the free market. So in this case, for an example, they forced interest rates extremely low. This is Obama's era, and now they started raising it, and I'll get to that. But what they're doing, see, in a normal free market society, banks would be competing to be paying you interest on your savings. Everyone was getting paid nothing on their savings. And so they're taking normal human behavior, which would be save for a rainy day and invest later, and they're decentivizing that behavior. They're penalizing behavior that humans would normally do. And so people are adjusting. Now, this is what happens with price fixing. Now, something that I wanted to bring up, though, outside of that with this graph, is you see these gray areas. They indicate recession. Every time right before, what happens? There's a spike, a leveling off, and a cut soon before the recession. There's a lag between when they stop hiking and when a recession starts. Happens here. See this lag? Look at this lag. They stop and they cut before it's coming, because they know it's coming and they're trying to preemptively goose up the economy with cheaper money, but it's always too late. It's always too little too late. And I believe that they intend to do that. I mean, they put on a mask like they're trying to help the economy and all that, but they're doing this all intentionally, because the rich get richer always, and that's who they work for. But generally, so the goal here is to learn how to invest, to become one of them. See, it's all about how can we react to this corrupt system to profit for ourselves. And something that should worry you if you're in U.S. stock markets, or should make you happy if you're into precious metals, is you can see that every time there was a recession in the past, they raise interest rates, which makes the fiscal environment more hostile, and it just makes money tighter. It makes it difficult. It's like putting a drug addict in withdrawals. It just makes things difficult. And they do that on purpose. They spike things up, make things difficult, cause a recession, act like they're trying to save it so that people want them as the next savior. And it's just about an illusion. It's an illusion. They create these crises and they act like the savior. But what's important to know here is they raise them, they stop, they do a too little too late cut, recession, and then they have to cut them big time. Once the recession's officially in place, there's a massive cut. So you see that every time here, even if it was in 1970. They hike. Oh shit, we made a recession. Cut. Slowly hike again. Do it all over again. Rinse and repeat. Every single gray marker you see here, the common man got screwed and the rich were able to consolidate wealth. And so it's very important to understand this. We're going to zoom in to a closer time period to illustrate more obviously where we are right now and what's coming. So what happened before? Raised rates, started cutting them, recession. Raised rates, started cutting them, Raised rates, started cutting them, recession. Raised rates, started cutting them, recession. Raised rates, started cutting them. You tell me what's next. Give me a like and subscribe if you thought this video was informative. Again, I recommend teletrader as a general gauge, like to get an overview of how the markets are doing. And that'll about do it for today's recession rhetoric video, I guess I would call it.